Good morning. It is Tuesday, September 29th, 2020, and we have a presidential debate tonight. Who is excited about that? I'm going to have popcorn and booze, maybe some booze. Actually, I'm probably going to watch a baseball game tonight. But in the meantime, been working on the plug and play stocks, and I will tell you, I was very conflicted on this list. I ended up making several changes, mainly to the growth stocks. The dividend stocks stayed pretty much the same, added Barrick Gold, but otherwise we're looking for quality. We're looking for a correction to buy in the fourth quarter, maybe the first quarter. Given all of the excess liquidity, we have to be aware that the bottoms from March may not reappear. So we have to do the best we can to buy the best things we can. Unlike a lot of people, I see the presidential election as a lot more binary than other folks. So when we take a look at some of these charts, I'm going to explain to you what I'm seeing, and you can decide for yourself if you believe what I say. I think for a lot of folks, it'll be a case like Saturday Night Live, where you hear me now and believe me later. But either way, we're going to figure out a way to pump these portfolios up. So make sure you read using the plug and play portfolio models before you do anything. Consider what your appropriate cash level is. 3 portfolios: sustainable growth, retirement growth and income, and then retirement income options. And stick with high quality, high growth companies that have shown relative outperformance. And the point on relative outperformance is this: unless you are looking at a rebound or turnaround play, which shouldn't be too many of your stocks, you want companies that have outperformed their industry, and stocks that have the attention of investors. So companies like oil companies and banks that are constantly not getting any good attention, you don't really want to try to buck those trends. So stay with the places where there's relative outperformance. Some of the things that we can do in the future is add utilities or real estate based on cycles. And that's something that I think we're going to be doing soon. I did add several stocks to the very short list. In particular, I added a pair of REITs that I like, and I did not put them on the plug and play yet, but by the end of the day, they might be. So I'm going to do one more wash through of the dividend stocks to try to really get companies that can pay a healthy yield, as well as offer total return through capital gains. And I think there's a few spots where we see that. Again, a lot depends on what happens the first week of November. I really think that the types of investments that you will want and the amount of cash that you're going to carry depends on what happens with this election. Because in one scenario, under President Biden, if he has the Senate, you're going to see the mother of all stimulus packages, and then we're going to want to be tied to anything that he is promoting, from infrastructure to alternative energy. I think under both presidential scenarios, I think that some of the big tech is a little harder to invest in, particularly companies like Facebook. I'm just not a Zuckerberg guy. I think that he's going to run his ship aground at some point. Not that I see Facebook at $50 a share ever again, but I do think that Facebook with a one handle is pretty likely. So when we go through these stocks, I want you to think about what is it the market may or may not know or may not be valuing, because ultimately that's what we're looking for. We're looking for things that the market doesn't fully appreciate. And if we can figure out what the market doesn't know, we're going to be pretty far ahead. And then obviously outperformance. So if we can find stocks that are either undervalued or outperforming, or outperforming and undervalued, that's fantastic. That's the holy grail if you can get value and momentum. So general outlook, we've been through that before. Go ahead and read that. Cash levels, we were through that last night with the ETFs. If you are defensive, you want to have a lot of cash right now, cautiously optimistic, still more cash than normal, pedal to the metal. And this is compared to what you would have long term, right? In your investment portfolios, I'm not talking about your money at the bank, but in your investment portfolios, you're generally going to want to be mostly invested. Only really your retirees are ever going to carry, 10, 11, 12% cash. And a lot of times that'll have to do with the level of spending that you plan to do. So let's start going through the companies. I had a bit of a change of heart on the QQQ stocks. Looking through QQQ, I still plan to own it. I just don't plan to own as much of it. I'm going to be moving more towards the innovation stocks with ARC and things that ARC might invest in, as well as some of the super high quality companies. When people talk about FANG or whatever acronym they want to use, I'm not a big fan of Facebook. Last night I talked about the MA stocks, Microsoft, Apple, Amazon, and Alphabet. So I'm going to call those the MA stocks. I want to own those 4 stocks. In fact, I'm probably going to put Microsoft on top just so I can use the acronym MA. But all 4 of these companies have something that I don't know that the market fully appreciates. And we're going to take a look at some of these charts, and I think it's going to jump out at you why you want to grab these. Amazon, we've talked about the eventual breakout of AWS, but I think that they probably spin out an alternative energy company as well. Imagine that, Amazon Energy. They're putting $2 billion into building out even more alternative energy, and that could pretty easily be spun out into an energy company. And you could even see a REIT come out of Amazon too. So Amazon could end up being 4 companies. Then we'd have to be careful of the structure to know which companies maybe got an edge. So for example, what if Amazon spun out a REIT, and then that REIT leased out those properties to Amazon, but also leased out the roofs to the energy company for energy. So Amazon would be collecting rents, the REIT would be collecting rents and paying dividends, the energy company would be selling energy to the grid, and then you got AWS, which makes half of their 60% of their money right now. So I think Amazon is another one of those companies that could end up being multiple companies. Alphabet, we've talked about the baby Googles that are coming. A couple have already showed up. A lot, they're all private still. Apple, we talked about last week or the week before. I think there's a dramatic expansion of iPhones coming with 5G. And particularly, I think that folks, given a choice between iOS and Android and whatever else is going to be out there, I think a lot of people are going to choose for the iOS operating system and an Apple iPhone. I think you're going to have most people getting over the whole anti-fanboy thing. And the reality is that the reason we used BlackBerrys back in the day is because they were safe. And I think that Apple is making a point of pounding on that. I think you could see Apple's market share increase by 20, 25 points across the globe to give them similar global dominance as they have in the U.S. at like 60%. But I think you see the U.S. jump dramatically too. I think you could have 80% of the phones be Apple's pretty soon. And then what happens with all those tied to devices? That ecosystem just grows and grows. So we definitely want to buy Apple on the pullbacks, because I do think there's another growth phase coming for them. Then Microsoft, will take a look at their chart. If you were on a sports team and somebody said to you, hey, who's that guy swinging the bat in the batting cage right now? Say you're on a baseball team. This is the one I relate to. What's his deal? And this is maybe the best guy on the team. You go, he's just a beast. All he does is hit. And that's what Microsoft is. All they do is hit. I mean, all the chinks in the armor that we always saw, nobody ever stuck a knife through it. So Microsoft is just a beast of a company, and I don't see that changing for a very long time. So I plan to own these 4 stocks, and then that will bring down my QQQ, as you saw yesterday with the ETFs. So sustainable growth, Amazon, take a look at the charts. Not all the charts are all the way updated. I have switched to using candlesticks to make it even a little bit more easy to use. But I think if you get Amazon in the middle 2000s, you probably have to buy it. I don't think it goes much below this range. You see right in here, that's pretty gigantic support. So if you got it for 2000-ish, boy, I think you'd be killing it. This is your Armageddon scenario here. And I really have a hard time believing that it would ever get down here again, but you never know. So this is your range starting at about 2400. Armageddon's way down here, and I think that this area here, and I'll update this chart, I think that area here right around 2000, 2100 is probably where you're gonna back up the truck. And we go through these, you know, you've got Alibaba, Berkshire Hathaway we talked about. They're sitting on a mountain of cash. So you can either consider this as part of your ETF portfolio or part of your stock portfolio. Either way, it's a conglomerate. It's a better proxy for the broad market than the S&P 500 because I think it's an upgraded index. You know, they own some enormous number of companies, operating companies, and they're a huge holder of Apple. So if you have a non-qualified account and you want to own some Apple and you want to own some Berkshire Hathaway, one thing to think about is in your qualified accounts, your tax-deferred accounts, own your Apple there, and then own Berkshire Hathaway because it doesn't pay a dividend in your non-qualified accounts. And if your income's under about $400,000, it doesn't look like your capital gains rate goes up under Biden, and it for sure won't go up under Trump. So I don't think you have to worry about capital gains either if you're, you know, 5-figure or low 6-figure earner. CRISPR Therapeutics, I've been on this one for a long time. I probably should have just backed up the truck in March and bought a boatload of it. This is a stock that has had parabolic growth. Now it's in one of these phases. Almost always it comes down. It's biotech, so it could come down pretty low. But I think this area right in here, 50-ish, you really got to be on it, you know, a little under 50. And, you know, you never know. It might only get into this zone. So up here, I think you may at least want to be selling cash secured puts. But given the volatility of biotech, this trend line here, and the fact that these are, you know, these specific levels, I think is pretty good right there. I'm going to update this chart as well, and the very low end's probably the middle 30s, because this is a pretty good chop zone here too. So just look for those chop zones and consider those to be your resistances and supports. So for sure, I think it gets down under 76. Does it go much lower? We'll have to see. Going through these, Delta, took Delta off the penalty list. I think that by sometime next year, you're going to see the airlines have a major resurgence to the point where airfares go up for a little while, and they make up some of their money. Delta is a slimmed down company right now. And as I talked about way back in January, right, this is the reason that I've been watching Delta. Delta's technology is so superior. I mean, they're not like the other airline companies, the other airlines. Delta is almost a technology company. And that's going to be good for them in the economy going forward. So expect Delta, like Ford, to add product lines. And I think that you're going to see them be a very interesting company going forward. Their culture is such that they expect to expand outside of airlines. So this isn't something that is new to them. You know, all the way back to before they bought that refinery, Delta's been a very forward-looking company. So expect them to either spin something off or or do partnerships. But I think that Delta not only is going to have the rebound in air travel at their back in a year or so, but I also think that there's a very good possibility that they join Ford and expand what the companies are. EA, you can almost interchange this with Take-Two, but I like EA a little bit better. I like the sports franchise, but we'll see. You know, this is a company that you can see how well it goes up. So it has that strong relative performance, big pullback, big rally, and if we can get a correlated correction, you know, right around 100, I'd have a hard time not buying it right around 100. You know, you have your end of the world stuff down here, but I think right around 100 is probably where we're going to be looking to get EA. I think that video games globally are going to just get even bigger and bigger. And I think that as you add the VR component, it's going to pull in a whole subsegment of people who aren't really gamers that become gamers later in life. So I think that you're going to see small group entertainment as one of the things that emerged from the pandemic, where, and in fact, even as we go back to bars and establishments, I think you might see gaming take off. I've talked about this years ago with GameStop. I thought they should have gone in that direction. But we'll see what they end up doing. They're trying to rebound, but I really think that GameStop blew it, but we'll see. Freeport Mcmoran I added to the list. We've talked about Ford enough. Freeport Mcmoran, there is an emerging shortage of copper, and Freeport Mcmoran is the biggest producer of copper. This is a stock that, if you go way back to the financial crisis, I invested in this almost right at the bottom last time, and I had a hell of a rally. So I think that this is something that on a pullback into this zone, 12-ish, 11-ish, 10-ish, you're going to want to buy Freeport Mcmoran. It puts out a little dividend, I think, too, still. But it's really a play on alternative energy and infrastructure. So again, if Biden wins, Freeport Mcmoran, I think, does really well. I'm hoping to buy it before the election. That would be my hope, is that we get a pullback before the correction. And if we do, this is a stock that, you know, could go up 300, 400, 500% for you, you know, from 10-ish or 12-ish up to 50-ish. And that's the kind of rally that you can see here. We've seen it before, and back here it happened too. So we haven't had that infrastructure plan that Obama wanted all those years ago. Didn't get one under Trump. If Biden wins, we'll get one. And then, you know, like I said, this is definitely not only a play on infrastructure, but a backdoor play on alternative energy. Because like I told you about a year ago, the new alternative energy, the batteries, as well as the solar panels made at Maxeon, they're using more copper and zinc and things like that. So I think that Freeport Mcmoran is something that you're really going to want if you can get it at a good price. Even now, it's probably not too expensive, but you get it on a pullback, I think around 12, you probably want to jump on that. Invitae just keeps going up, right? This is a stock that is in genetic testing. So I expect, because it's volatile, it'll come back. I'm hoping that we can get it under 30. This jitterbugging in here makes me think that maybe that's a new support area. But you see how I had a hard time breaking out here. You know, I might need to pull this up to about $30 a share, because it might not break through that line right there again. Now, I'm anticipating a lot of volatility, and their revenues aren't consistent, so maybe we do get it down here. I have to think this one through a little bit more. We're going to have to watch the indicators and let the market tell us. And that's an important point. You know, sometimes you just have to let the market tell you. Itron, we talked about this in the ETF webinar. They're included in PVW. So Itron is going to get some alternative energy love. And this company, because the municipalities they deal with are under pressure right now, they're suffering a little bit. But if you take a look at what was going on with this stock before coronavirus, it was starting to break out. This is a stock that I originally discovered because I owned Silver Spring Networks. And they bought Silver Spring Networks somewhere in here and added them and went on a nice rally, pulled back because of a lack of state spending. And then they started to break out because everybody started moving in the direction of efficiency, and then coronavirus hit. So if we can get something close to a multiple bottom, 1, 2, 3, 4, you need to own this stock. And I mean, it got down to that level for a day or two. So maybe this is not what you're looking for. Maybe this is what you're looking for. But again, keep an eye on the overbought and oversold signals. Micron, we know that they're in an oligopoly on DRAM, whatever you want to call it. I updated the chart. Looks like 40-ish is probably about where it gets to. Hard to think under any mediocre or better circumstances it gets down here. But I think that just general volatility pulls you in here, and then you want to buy it. And ultimately, I've always thought that this stock would really rally out. I've always thought that 100-ish was a good number for it. You can see these levels up here. I do ultimately think it breaks out of this, right? Here's your resistance. When it breaks out, it's going to go up 20, 30 bucks from the breakout. So get it cheap. If you want to trade it in the range, go ahead. But once it starts breaking out, you know, especially once it gets past about 65, it's got another 50% to go. Nvidia I added just because it's that good of a company. I don't know if we ever get to buy this. I really don't. I mean, this damn thing just keeps going up. We need a good correlated correction. See this level here, resistance, breaks out. I think that you need to buy it at the top of this range. Again, you have your Armageddon scenarios, but I think that this is the range that you need to buy it in. So 325-ish is probably where you take a look at it. It's way higher than that now. Maybe it never comes below this line again. I find it hard to believe. I think a correlated correction means that everything gets sold, and that's what you're looking for. Is we can get a correlated correction, you know, that the Fed doesn't buy, you know, more bonds than they're already doing. I think you have this. So this is a stock that you have to buy in the low 300s, no matter what type of investor you are. They're that important to the economy. PTC, automation, Pulte, Homes, Roku we've talked about, Square we've talked about, SunPower. You know, I told people to sell puts on it back here. I don't know how many of you did, but now it's getting ready to break out. So the next pullback, you really, you know, you have to establish your position, you know, whether you're selling puts or buying stock. Travel Centers of America, again, I discovered this company because I was wondering about Warren Buffett, why he was buying truck stops. And I started thinking about just buying a truck stop and, you know, being that guy that pushed the broom that nobody knew who he was. I think that if you can get it down here around 15, which I think is likely to happen because it has exhibited some volatility, I think you need to get this at 15, 14, 13, right in there. So I'll actually put an orange box up here. I'm adding the orange boxes, all these charts to kind of give you the broad range that it could go in, and then where I think I'd probably buy it. It was usually going to be at the top of the box, top to center. Zendesk. Now, I don't know that we've talked about Zendesk much, but they are starting to break out. So you need to buy them on a pullback, and here's why. They're starting to go upscale. They're starting to sign bigger and bigger customers. So this is the type of company that could drop $1 billion deal out of nowhere. So I think it's important that we get a piece of this. I had it way back in here. A client had it in their portfolio when they came. But when it ran up, I sold it. And then I never bought it back. And I probably should have. You know, I've gotten a couple of chances around 70. And I don't know that it quite gets down to 70. If it does, that's a backup truck moment. But I think that this area here, 80 something is probably where we're going to get it. But hey, if we get the bonus program and we get it around 70, then that's awesome. This is a stock that could go well into the hundreds. So the dividend stocks, I'm not completely done with the charts. You'll see that I added Apple. Again, I would say if you think you want to own a bank, buy Apple instead. It's better than every bank out there. It's really that simple. Analog devices. This is a stock that you have the secular trends at your back, but you definitely want to wait for pullbacks to buy it. Then you get a good dividend and the secular trend at your back. So this box here, I really could have extended this all the way down. This consolidation area here either means the company is going to fall apart and fall off a cliff. Doesn't seem like that's the case. I think it just means that you're going to see a basic bouncing. This area here, see all the times it touches this line. See, remember, this is called the confluence, where a bunch of Fibonacci lines hit. So this area in here is probably where you can buy analog, and that would be a really nice dividend stock for you. Broadcom, same deal. Cisco, I read up more and more on Cisco. I don't think they have a ton of downside, but it's another one of those tech stocks that, because the dividend's only good from a certain price, this box right here, I think is, now that it's broken through, this is where it's headed. Cisco 30 to 35, I think that's where you get it. Buy it in that 30 to 35 zone. You see that this is pretty good supports in here. I think it's going to that's as low as it got before. It's not going to go lower. Their balance sheet won't allow it. They'll just buy more shares and pay a bigger dividend. So I think you get it in here, 30 to 35. What you now have is a company that's integral to 5G, and their security revenue is probably going to go up. So, they have a role to play in the security of the internet, and that's going to be their next place where they'll see growing revenues. And it's already started. Disney, I'm going to Disney as soon as I can. I think that's all you need to know about that. Disney is really a new company since 2012. So I don't even think it's important to look further back. And even this rally, all it tells you is that you have a new class of shareholder, and see how it's been chopping in here for years? At some point, it breaks out. And it started, and then coronavirus hit. So this area, this could even be dragged up a bit to 123, I guess. I mean, you could buy Disney right now. But given that I'm negative on the market, I'm looking to be a little bit greedier. And I think if I can get it right around 100, I'd be pretty happy with that. So I'll update this chart. So I do think you could conceivably buy it right now. But I'm looking closer to 100. The thing that would get Disney to go lower is if we really got stymied on the coronavirus vaccines, right? I mean, I think that it is very likely that we have a virus by next summer, or excuse me, a vaccine by next summer. But if we don't, then maybe Disney's got bigger problems and you can get a lower price. But ultimately, you have to figure we beat the pandemic. If nothing else, it just runs its course and we all freaking get it, which would suck for all of you. I've had it. You don't want it. Illinois Toolworks, Barrick Gold, right? Buffett, and foreign currency exposure. Illinois Toolworks, if they get an infrastructure plan, they can go to the moon. Kinder Morgan, I knew something was not quite right. There we go. I did fix that. So here's your Disney, right? I think you could buy it right here if you wanted to, but I think this is the box that you want to use, right? Barrick Gold, there you go. I think it's unlikely to go below 23-ish, right? Because Berkshire will buy it. I think that Barrick Gold is one of your best stocks to sell puts on, to be honest with you. I think you do really well selling puts on Barrick Gold. Like $25 puts to December. Here's Illinois Toolworks. Again, it's had these huge rallies, pays a dividend. If it comes down into here, right around 150 something, you probably jump on this because not only are you collecting a dividend, but you could get the big stimulus package, and then it could end up being a doubler for you on top of that. So as far as your dividend growth stocks, I think this is one that you really have to take a look at as being a major beneficiary of a Biden presidency. Kinder Morgan, I lowered the buy range. At some point, you just have to respect the chart. It's very possible it gets back down to 10. I'd like to see it hold here, but I can't tell it what to do. And I got rid of a lot of the charting from back here because I just think it's a different world. So let's focus on the last couple of years. And it's clear that this has been just a shit chart lately. And this rally and then just slow trickle out. Retail doesn't like it. And they should, but maybe they never do again. In which case, you're buying this for the dividend and the potential for M&A. You don't really care about the retail side because I don't know that you can care about the retail side. But the dividend and the potential for M&A is so big, they're both so big, that I think it's hard to lose on this one from current prices. Now, if you were buying at 14 and 15, you got some money to make back. And I don't think that you're going to lose having bought somewhere in the teens. You might just make less. So if this chops around in this box for years and then gets bought out at 18, 19, 20, and I think it should get bought out for around 30, to be honest with you, based on their pipes. But again, who knows? Who knows how that gets valued? But I don't think there's a lot of risk in it at this point. Super high quality, Home Depot, Lam Research, Lockheed Martin, Lumen Tech, we're banking on the M&A here, banking on them selling part of the company. Been talking about that for 2 years. Could it go lower? Could. I will tell you, this is a fantastic consolidation pattern. So it probably does break out here in the next year or so and get back up into these levels. And then at this point, in the 15-ish area, you're going to have a decision to make. 3M, I like 3M. Merck, I think they're the ultimate winner of the vaccine war. Microsoft, again, it's just a beast. I mean, look at this chart. Where are you going to buy Microsoft? Man, if you can get under 200, it's just hard not to buy this stock, right? So right about here, 170-ish, I would be a big buyer of Microsoft around 170. If you're more aggressive, you can buy it closer to 190, 200. I'm this guy. Could it come all the way down into here? It could. Again, if Trump wins, I think that a lot of these lower ends happen. Newmont Mining, same argument as Barrick, except more American. Nutrien has been firming up here lately. Northrop Grumman, if we get our hands on it. Qualcomm, they're such a big part of the internet. Raytheon, with their cutbacks lately, I think is going to be very good for them coming out of the recession. Starbucks has really done a good job reinventing themselves again, but still being coffee. So Starbucks is another one that you want to buy in pullbacks. Store Capital, I think, is the best REIT out there. I added 2 other REITs, and I'll show you those on the VSL in a second. AT&T, again, Warner Brothers, and then Taiwan Semiconductor might be the best company out there that you want to get your hands on. I'll update these charts by the end of the day and then reissue this and then flip it over to fundamental trends. So in the REITs, I added American Campus Communities. Again, this is a backdoor play on Biden. If Biden wins, it becomes much easier to go to college. And I think that this company does very well for a REIT. And then this is a dividend sleuth stock, and I agree with it. Very similar to Store Capital. National Retail Properties, a triple net lease company. It's just started to come back. Dips back into this box. I think you probably buy it like 6-ish% dividend and pretty firm support. So, it doesn't have much downside. Again, if President Trump wins, although he supports real estate, I just think his policies could really cause a major, major depression, really, as our allies turn away from us. And I think that'd be a major hit on the economy. And at that point, I'm not sure I want to add until, real Armageddon levels get here. Although this is probably the line. So, hate to be so binary, and I know some of you like Trump. I think you're wrong to like him for economics. You can like him for whatever you want to like him for, but you really shouldn't like him for economics. I think that you want to buy this in here. Trump wins the election, probably down here. All right, what kind of questions do we have? I added Exact Sciences back to the master list. I believe it's in the mid caps. And that's because I've been studying liquid biopsy, and liquid biopsies are going to be a big deal. And Exact Sciences is potentially going to be a big deal in that they just gave a pretty good conference. I'm already familiar with the company, so I think that Exact Sciences is something for us to keep an eye on a pullback as a very small position as a potential winner in liquid biopsies. If you're not familiar with what liquid biopsies are, go over to the ARC website. They talk a lot about it. Quidel Corporation. Viva is information technology for healthcare. And I would love, this is one of the companies that I wanted to put on the growth list, but it's just so out there right now that it's hard for me to say, how would we buy it here? And it's clearly starting to turn over. So I think you get one of these diggers. How far down does it come? I'd probably be a buyer around 180, right at the top of the box. But again, President Trump wins. If the economy goes bad and hospitals don't get funded and states don't get funded, these are all things you really should be thinking about. So just say, I like the lower taxes. Well, the lower taxes don't affect most of us unless, I got 20 grand each of the last 2 years because I own LLCs. But, the reality is that if you're not an LLC or a property owner, tax cuts didn't make much difference. And middle class tax cuts are scheduled to expire in a couple of years. So in any case, could it get to the bottom here again? Again, I think this is the Trump price. This is the Biden price. That's the way I'm looking at it. Delta Air took off the probation list. And I do think, like Ford, you're going to want to figure out a way to own this. Advanced Drainage Systems, I tell you what, impressive company. And again, another backdoor play on Biden. All the piping for sewer systems and commercial drainage. If this stock pulls back to 40-ish, in this range, you're going to want to jump on. That's a heck of a rally. Pulled back, broke out again. You might not get another chance. In fact, I hate to use this Fibonacci level. I'd rather use this one, to be honest with you, because it's a whole. Even though I don't think this is a bad buy up here, it's not maybe good enough for me for what I'm looking to earn. American Campus Communities we talked about, National Retail. Take-Two Interactive I added. I prefer EA, but somebody was asking about this, and it might be a horse apiece. And you could probably own them both, half positions. I've been updating the plug and play. Well, a lot of these charts are brand new. I even moved this over so you can see the master list. I got rid of the speculative list, and honestly, I should probably just get rid of the shorts. Doesn't help us. I need to figure out a way to make this crypto thing work. Just haven't had time. The Rebound Portfolio, right? A lot of stocks here. A lot of these stocks have already ran, so I don't really know what to think about some of these. Caesars did a secondary offering today at $56 a share. Where's the value? So I don't know. Some of these stocks have already rebounded. They don't make sense. anymore. You know, and Phase, Solar Edge. I don't think there's any point anymore to those. Caterpillar, you know, Delta's the one that I think deserves attention right now at Freeport Mcmoran. So somebody asked about another relief package. I think it's relatively clear that won't happen before the election. So I think that October could be a pretty brutal month. We'll see another plan at some point, and either they agree to a plan during the Trump administration, or they don't. But they're going to have a plan eventually. It's just a matter of when. I don't know that the stimulus that they're looking for is all that important right now to the market, because I think that the cards are already dealt. I think the die is already cast. I think that this surge in unemployment that we're starting to see is going to be damaging to the market, and a few $100 extra a week isn't going to help the fact that people are taking money out of their 401k and no longer contributing to their 401k. I just think that adds up. It's been sucking the liquidity out of the market. Without SoftBank and some of the big call buyers, and we can see that they're gone, the market has been choppy, right? You know, it was down, what, 9% on the S&P and 11% on NASDAQ. So, you know, the excess liquidity is not as excess as you think. And I don't think a few $100 extra a week for folks is going to matter. You're already seeing municipalities laying off people, right? Cops all over the country getting laid off, firefighters getting laid off. You know, there's a lot of people, you know, in New York, I think garbage men were getting laid off. So, you know, there's a lot of people who, when you take a look at the economy, it's bad for the economy. We're in a depression. You know, anybody who doesn't grasp that we're in a depression, get in your car, pack a cooler, and drive around for 3 days. And go as far as you can in 2 days, and then come back and make it a winding trip. I'm telling you that from city to city, town to town, state to state, you will see the most depressed conditions you've seen since 2009. It's that bad. It is. I've done Illinois and Wisconsin recently. I'm telling you, it's that bad. And Wisconsin's better than most states, except that we decided that we wanted to lead the country in coronavirus. Yeah, genome sequencing, you know, anything to do with DNA, it's a matter of what you can sell, right? I mean, how much revenue can you generate doing certain things? So as sexy as certain things are, it does come down to where in the world do we make money. Ultimately, fundamentals matter, right? At least for moments in time, fundamentals matter. So we want to find the companies that not only are sexy enough for investors to care, but are going to start dropping big piles of money to the bottom line. That's why I like Freeport Mcmoran and Delta. I just think that Delta comes out of this, compared to all the other airlines, they're in such better condition. I mean, there's just nothing about them that's not superior to the other airlines. Somebody mentioned their frequent flyer program is more valuable than other airlines. I don't even know about that, but I do know that Delta's management is better than any other airline's management, hands down. It's not even close. So keep an eye on them. Their technology is so good. You know, they're going to do things like Ford did. You know, they're going to end up investing in other projects because they're going to say, we have technology and we have money, and you're a manufacturer, let's put together a deal on a joint venture. They're going to make money other ways. And then airline, I will say, I am fabulously bullish on air travel a year or two out, right? I don't know how fast it's going to happen, but if somebody like me is jonesing to move around, that means everybody's jonesing to move around, because I'm a pretty patient guy, you know, so keep that in mind. You know, there's going to be a rebound in airlines. You're going to want a piece of it. I think Delta's the one to go with. Any thoughts on AMT? American Tower. You know, I think you missed the boat on this one. I mean, what do you do? How do you buy that? Huge rally. right? Triple in 5 years, and now it's been choppy, and clearly has downside. I mean, I would have a hard time buying it. Well, for sure, I'd have a hard time buying it above 200. Somewhere between 200 and 160 is probably the buy zone on this one. It's definitely something. This is definitely one that I should add to the REIT list. So yeah, this area from 172 to 155, I think is quite possible. A retest of the bottom, man, it'd be tough to see that. I think that this area right here is pretty. This is a pretty viable area here, right around 210. Things would have to get bad to get down here, right? So I think that 210-ish is probably where you're looking if you want to get in on EMT. I don't know enough about the company to know that it can do much more than chop anymore, because the build out is, you know, pretty far along. I have seen the Ford Mustang Mach-E SUV. It's awesome. I do think business travel has changed forever. I do. I don't think that you're going to see as many orders taken on new airplanes, though. So there's a way to control for the supply-demand equation if you're an airline, right? You just don't order more airplanes, which is why I don't like Boeing. You know, all these people who are jumping back in Boeing, I don't know what they're seeing. Boeing is it's gonna take a long time for Boeing to recover. And I don't know enough about Boeing to know if they have the technology to become a conglomerate the way that I see Ford moving, the joint ventures I see with Delta. You know, we should study Boeing because it's been a linchpin company. But what if we don't increase military spending for 8 years? One, it's probably smart not to increase military spending for 8 years. But also, you know, you take a look at what they're doing, you know, they've got some serious competition on everything but the jets, right? You know, so, you know, their airplanes, you know, it's them an Airbus, but everything else they do has a lot of competition. So they have to be a technology leader to adapt. And I'm not really sure that Boeing, because there's a bias to be invested in that company, I'm not really sure that they have seen their bottom. I really truly don't know that Boeing has seen, and this is right, this is a double bottom here, right around 100. To me, I think it's likely, it's more likely than not, in my opinion, that they break this support level. They head all the way back down here to the low 100s. Do they break further below it? I think there's that risk. I mean, who says that they can't go through this period again? So I don't like Boeing. Not in a box, not with a fox. Not here, not there, not anywhere. Any more potential rally on 5G? Magic 8 Ball says sure, why not? Raytheon, 1/3 Pratt & Whitney. Yeah. Raytheon's a great company. All right, no more questions. Going once, going twice, going 3 times. All right, so we're gonna call it a day. Focus on these companies. And if you are a retiree, I'd really be looking to sell puts on a lot of these, on Delta, on Ford, on Itron, right, on Micron, on SunPower. Sell those puts, collect that premium. If you end up with one of these companies at a low price, then good for you. Then you ride it up, you write a covered call, or you sell it. So I really want the retirees to think more about selling puts. I think it's something you need to familiarize yourself with. Stop fighting the idea, oh, it's options, it's scary to me, I don't understand it. Take the time, you're smart enough to do it. It's not that hard. Learn how to sell puts. It'll be the best thing you ever did for your retirement portfolio. I think for almost all puts, you should be looking to sell December. Just about everything, sell December puts. I think that'll coincide with something, bear market, correction, whatever. I think December puts is what you should be selling on everything right now. And if you have to go out to January because there isn't a December put, go ahead. But almost everything has December puts. So I'd be selling December puts pretty much across the board. All right. Have a good rest of the week. This was the last Tuesday webinar. We're going to stick with Mondays and Fridays, so make sure you have your questions available before those are scheduled, right? Get them in writing. Put your questions in writing on the message board in the forum. So we're not going to do too much of this pulling out all the chat. I might not even pull the chat up. So get your questions, think them through, put them in writing on the board for other people to see. Mondays and Fridays, I'll update the schedule. All right, take care.